Hey everyone, this is Robert Keens from goldsilverpros.com. And today I have a follow-up article on an article I wrote a couple of months ago on China Gold International, a very large gold and copper producer in China. And I wanted to show you that article and then talk about some of the updates that have occurred with China Gold International in the meantime. Here, the article that I wrote for Seeking Alpha back in February was called China Gold International is cheap now, but won't be soon. And as you can see, the chart here on Seeking Alpha, we blew it out to 10 years. This stock used to trade above $6, and now it's trading at less than $1. And when I wrote this article about China Gold International turning it around, people thought I was absolutely insane. There are reasons for that. China Gold International had about $1 billion in debt in terms of a revolver and in bonds that they had issued, as well as their mines are about middle grade, actually slightly lower than middle grade. Their CSH mine that produces gold is about 0.62 grams per ton, which is not particularly strong. It's hard to make a profit at that. The company has to be very efficient in their mining process. And given the fact that they had so much debt, and they have so much debt service, which I'll show you here in a moment, it makes it difficult for them to make money off of their gold. They also have a massive copper mine, which is going to basically an underground pit mining operation, which was going to increase costs. So, and we have a falling price of copper. So the price of copper now is below what it cost China Gold International to mine. So people thought I was absolutely nuts. Why are you advocating for China Gold International in this case? I mean, just look at the chart, Rob. Well, I did look at the chart, but I also looked under the hood and was looking at some of the facts about this company, which I wanted to share with you. So some things that I want to point out, I put here in my original article, and I'll quote that now. The close relationship between the government and China Gold International ensures the company's production goals will be met with local Chinese demand. Two major factors ensure that they will find local buyers. China's middle class is growing and constantly demands more base metal resources. I'm talking about the copper. And again, the copper in the second point, the Belt and Road Initiative, connecting 75% of the world's economies, needs a ready supply of materials to support its planned massive infrastructure expansion. So all of this copper is needed for Chinese state initiatives, and they need it from China Gold International. They're not going to allow this company to fail. The second point is China Gold International also produces a ton of gold every year, and the Chinese government has been buying all domestic production of gold for as long as I can find that data, going back at least 7-8 years. Not only that, but China is one of the largest purchasers of gold in the open market. And for those two reasons, I believe the Chinese state has been buying more gold than any other sovereign nation in the world for the last 7 to 8 years. They want gold to back their economy. China has plans to become the leading economy in the world. And for those reasons, both the copper and the gold production coming out of China Gold International is going to get produced. The Chinese government will not let this company fail. So let's do a little bit more research into why I believe that's the case. Here's an excellent article over at Bronte Capital talking by John Hempton, talking about the relationship between the Chinese state and China Gold International. And let's start with who owns 39% of China Gold International. It's China National Gold, which happens to be one of the 100 centrally owned state-owned enterprises in China, one of the largest. Itself is the biggest gold miner of the world by ounces in revenue and able to borrow AAA credit. So here you have one of the largest shareholders of China Gold International having sterling credit, being a state-owned enterprise in China, and owning 39% of China Gold International. That clearly states the relationship between the state and China Gold International. Further, John did some research into how the previous debt that was borrowed in 2017 was backed by the government. And so I wanted to point out what he found from Annie Lee over at Bloomberg. The 2017 debt, the $500 million 3-year bond, had a letter of support by China National Gold Group Corporation. And China National Gold Group was basically saying, we're going to support China Gold International and we're going to back this debt. Now, that is not a guarantee. A letter of support is not an actual guarantee that says China National Gold Group has to back that debt by China Gold International, but when you put a letter of intent behind it and it's a state-owned enterprise, you're basically betting against the Chinese government that they're going to allow China Gold International to fail. It's not going to happen. So here is what happened recently when that debt came due in June for China Gold International. The highlighted text I have in this release on China Gold International's website clearly states that they were able to get US 300 million at an issue price of 99.886%, bearing an interest rate at 2.8% with a maturity date of June 23, 2023. So they got the debt issued for 3 more years at a rate of 2.8%, which is lower than most people can refinance their houses in the US at historically low interest rates. And again, the point is they're not going to have an issue taking care of that debt. The state is going to back them. They're going to find ways to maintain the production from China Gold International, because both the gold and the copper that's coming out of China Gold International's 2 mines is key to the rise of the Chinese economy, and the Chinese government is going to continue to backstop it. So I wanted to clear that up. Here's the evidence. China Gold International is not going to have an issue with their debt. Now, I wanted to take a look at their performance over the last few months. So here is the 3 months ended March 31, 2020, discussion and analysis of financial condition, result of operations from China Gold International. I'm going to scroll down and we're going to talk about their performance. So you can see right here that they've increased their revenue to 148.6 million during that time period, ended March 31, 3 months, compared to 145.6. So they increased it 3 million year over year. Mine operating earnings increased by 19%. So they're reducing costs. They're going on a cost reduction campaign. They're becoming more efficient in their mine operating procedures. Cash flow for operation increased by 129% to US 16 million from US 7 million. So they're generating more cash flow. The total gold production increased 18% to 51,829 ounces, and total copper production increased by 9% to 35.7 million pounds. If we look at the outlook, they're now projecting gold production of 212,000 ounces in 2020, copper production of 145 million pounds. That is substantially up over previous periods. And they're focusing their efforts at optimizing the operation of both mines, so on and so forth. So they are not stopping. They're increasing their production, they're reducing their costs, they're increasing their cash flow. Now, they're still not profitable, and I'll show you why. Dating back to March, the revenue was 148 million, cost of sales and everything, until you get to the loss of profit before income tax of negative 7.7. And the reason is if you look of their financing costs, 10,516. So it's that debt that's causing them to have a loss. If you subtract off this and pretend they didn't have the debt, they would have a profit of about 1.331 for the quarter ended March 31st. And this data in this column, the latest financial report, is before the announcement of the refinancing of the debt at 2.8%. So they just brought their financing costs down. Now, will that make them profitable for the next quarter through July? No, because they just refinanced in June. Will it make them profitable for the third quarter ending September? I really don't know, but the point is they've increased production, reduced costs, refinanced their debt, reduced their cost of debt. And so, like I said in my article, all of those things that could potentially make this company attractive to investors, especially value investors or somebody looking for a bargain, are taking place, and the company is proving it over and over again. So I wanted to reiterate, China Gold International is cheap now, but won't be soon. I think this price that you see, this chart going down here, is going to start ticking up. Now, they do need to make a profit. Will they make a profit in 2020? I'm not 100% sure, to be honest with you. I'm still worried about the overall debt overhang. I'm still worried about the fact that while their cash costs are low on their gold, their overall costs are high. And let's examine that. Their cash production cost per ounce in the period ended March 31st was $995 US, but the total production cost was $1,361, meaning if you add on all that debt and all those other things, it's a lot more expensive. Now, how do they get to cash costs? Well, they're taking out depreciation and things like that to get there. So it's an accounting number. It still means it's fairly expensive for them to produce gold when you add in all of their costs, including financing. but they are able to get it out of the ground profitably. They have to deal with their financing, and they have to continue to be more efficient in their mining operations and bring those costs down, which they have been. And I think if they continue to do that, eventually going to reach profitability. And here's why. The gold, right now, we reached an 8-year high in the gold price of over $1,760 an ounce. I clearly see us getting to the $1,900 an ounce. And we're not even talking about any sort of financial crash or currency issues in the United States. So I continue to see the gold price rising over time. Indeed, the gold price in the last year has reached highs in other currencies, the euro, the pound, lots of other currencies around the world. It just hasn't reached the high in the US, but it will. I think eventually that's going to happen. It's going to surpass 1900. And that's a fairly easy prediction to make given all the debt that the US has and the fact that our economy is slowing down. The coronavirus has been a catalyst in the slowing down of the world economy. And we're going to start to see more pressures on the world economy. That gold price is going to continue to rise. Also, probably the biggest factor in the rising gold price is negative interest rates, which are very prevalent around the world. And while the Fed in the US has declined to go to negative interest rates, I think eventually they may have to. And we'll keep an eye on that for the rest of 2020 and 2021. I wanted to talk about a little bit about the Jama mine, which is in that their copper per pound production cost is $2.87. Now, copper is not selling for $2.87 a pound. So this is the biggest drawback for this company is if the world economy slows, and this is something that I wrote in my article, if the world economy slows, this is going to put a lot of pressure on this company. Let's go down to the risk and downside. The biggest operational downside is the decision to open pit the Jama mine and reduce the ore grades of the copper. This increased cost per ton and mitigates profit of the mine. While inevitable development of the project, we encourage investors to include lower copper ratios and assumptions of mine return. And should the demand, I wrote down here in this paragraph, should the demand for copper and other base metals crash, it could create enormous amount of pressure on management to renegotiate the debt repayment schedule, which they've already done, but it may also put pressure on their overall revenues and their overall profits. So I think everything that I wrote in this article in February is true. Yes, there are downside risk of a lower copper price due to deflation in the world economy, but that could be partially offset by the rise in the gold price that we'll continue to see, I think, as the world economy slows down and you start to have these debt-based issues in the world economy, these negative interest rates and slowing production. Gold is going to continue to rise. I think it'll blow through the 1900 level either this year in 2020 or probably the first quarter or two of 2021. I think that's inevitable given what's going on in the economy. But again, China Gold International is not going to ever have a problem refinancing their debt because they have these layers of support from the Chinese national government, which is not going to allow them to fail. So at the end of the day, I think this price chart is going to reverse. I think if you're buying down here, you're buying low. Could it go a little bit lower in the short term? Sure. Do I think it's going to go back up to $6 an ounce anytime soon? No, and maybe never, because the ore grades of both the copper and the gold mine aren't the best in the world. But given the fact that the government is involved in this company, they're not going to let them fail. Given the fact of rising gold prices, given the fact of the Belt and Road Initiative, which the Chinese government is never going to stop, even if we have a recession across the world, and they're going to connect 73% of the world's economies, the copper that China Gold International is producing is going to get used. It's either going to get used by China or it's going to get used by Chinese partners. So regardless of what the copper price is, all of the copper out of this mine is going to get used in these infrastructure projects. They are key to the rise of the new Chinese economy. They're key to the plans of the Chinese national government. So again, China Gold International is a company to look out for. Just pay attention to them. They're really cheap now, but they once were trading at over $6. I think they'll rise again. I don't have a price target for you. I've got to see first how efficient they get with their mines, and I've got to see the effect of a deflating world economy on the overall copper price. But we'll stay connected to that over the next 3 to 6 months, and we'll definitely provide you an update for that for the rest of the year. I'm going to continue to follow this one because I think it's a fascinating look at the relationship between China and its state-owned enterprises and its gold and copper miners. And I think there's a lot more to be told in this story. And I think it's definitely one to be interested in if you're a value investor or even a distressed stock investor. I think China Gold International really fits in either one of those categories. All right, this will wrap it up. Until next time, this is Robert at Gold Silver Pro.